Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vase. I don't know why I'm muting right now. And we are going to have a guest on today as well, but it's a guest you've seen before. Tone Vase. Back to the stream. Hey, man. Back in the hoodie.
Back in the hoodie. How's it going? I'm happy to be here. It's nice Sunday morning here in the Rocky Mountains. I was up late watching some UFC fights, so I'm definitely feeling ready to get into some charts.
All right, good to go. I'm sure all of you are familiar with Sawcruhteez. He was doing shows along with Tyler Jenks on the Hyperwave channel. Unfortunately, Tyler Jenks has passed. Sawcruhteez has branched off on his own with his own YouTube channel. Here his Twitter, his TradingView, and his YouTube channel are in the video description. You've been doing tutorials on BitMax, it looks like.
Yep, sure enough. Put together BitMEX 101 through 105 tutorials. Have started to affiliate for them. So I wanted to have some resources for people who are just getting into trading, and then also the more 104 and 105 are a little bit more advanced for people who are maybe been in trading for a while but don't really understand how to use leverage properly to make sure they don't get themselves liquidated, and then also kind of talk about some of the methods I've learned from Ugly Old Goat in 105 about the basis and using the futures curve to potentially identify major tops and bottoms. So I think it came together really well, and I've been getting some good feedback so far.
All right. Well, you may also want to take some lessons from me and how my affiliation with BitMax ended. So just keep that in mind.
Absolutely. Definitely trying to stay as anonymous as possible. So I appreciate that.
All right. And of course, guys, the tonevase.com website. We did the AMA this Saturday. It went really, really good. I have a 3-hour video of that content. The questions were excellent. I'm not exactly sure what I'm going to do with it yet. I don't think it's fair to put this up for free. I was going to put it up for like $100 or something if anybody wants to buy it. But I want to show you what the questions were ahead of time. But I'm not exactly sure how to do that because this description doesn't really, like, my website is not designed for that. So I'll need to think about it and figure it out to somehow display the questions if anyone's interested. They were really, really good. So we'll probably do another one of those maybe once a month or something. Bucharest. I will be doing a workshop in Bucharest. I will be going over to Romania to speak at a conference in Cluj, but I do want to check out Bucharest, so go ahead and check that out. And my calendar, that's it. On the road. Right after this episode, I am off. I am driving to Washington. I'll speak at Black Blockchain Summit, and then I'm off to Europe on Wednesday. And I will be in Latvia, and then lots of other countries. You can keep an eye on that. And in October, there will be in other countries. Oh, here it is. Here's the Bucharest workshop. I'm like, what is that? That's the Bucharest workshop. All right. And of course, the big one. Oh, I'll be doing something in Traders Fair. Oh yeah, Sawcruhteez. If you want to come to Singapore, we should discuss this.
Absolutely. I'm actually in the process of booking plane tickets right now, and was wanting to stop into Singapore to at least say hi to Leah and maybe to check out that fair as well. So let's definitely have a chat.
Yeah, let's talk. I'll be doing a little workshop in Traders Fair as well. You can probably see it on their website. And hey, and we'll both be at the Financial Summit. The website is finally like getting perfect to my liking. It's so hard to do these things the first time around. It's so much easier like on the second go around. But you can check it all out. All the details are here. We're going to be adding more pictures as more people are signing up and looking to be there to chat and network with us. So check that out. All right, let's talk charts. The long-term view has not changed. We've been stuck here. It's really interesting how we're getting these lower highs and higher lows, creating this a bit of a, I guess, bullish pennant on a monthly scale, and that's rare. You don't get that quite a bit. It is a bit of a bullish sign to me, getting this pennant on a monthly scale.
Yeah, I was looking at that just recently because somebody brought up that we have only maybe one time in the past had 2 monthly red candles and stayed in a bull market. So it looks like these are, yeah, Henkinashi candles. If you want to just throw on normal candles, it looks quite a bit worse. I mean, it just looks like some real reversal candles. And the last time we did have back-to-back red, we sure took off hard right afterwards. If we look back kind of maybe September, yeah, right there. The difference is that's like a hammer candle opposed to a shooting star. So I am definitely can see that that may be a pennant, and if we break it to the upside, absolutely, and the target would be beautiful, just like it would break through all-time high. So absolutely, if we can break through what you have been drawing as a descending triangle on the lower time frames, or this potential pennant on the monthly, that would be super bullish. But if we break down 9,000, that would confirm that shooting star and also your descending triangle. So time to pay very close attention as far as I'm concerned.
Yeah, I'm with you. Now, these two red candles, there was also a big fundamental event that was the halving was right here as well.
Yeah, interesting.
So the halving actually took place the first week of in July, and this was the August candle, and this was the height. This was a combination of having no way, I'm sorry. This was the combination of having. This was the triple M Ponzi scheme. So this was mostly having hype that doubled the price of Bitcoin from like 400 up to 750. And then we pulled back into the halving, and then we took off to the races.
Yeah, just classic buy the hype, sell the news, and then buy the dip. That I wonder if we'll play out somewhat similar moving forward.
Yeah, so the parabolic stars are not really moving. This is the weekly scale. The weekly scale remains in neutral territory. For me, the weekly scale got into neutral cash territory on July 15th, and it's been there ever since, and it will be there into the end of this week. And no matter what happens next week, it will be there as well as a neutral candle. Well, actually, not necessarily. I'm sorry. There is a way to get out of the neutral territory according to sequential. If we start trading below 9,700, if we get to like 9,750, if next week we break that Fibonacci line, that activates the bearish trade on a weekly scale.
Interesting. So if you broke down that 0.382 line, you wouldn't be looking for it to go below that one. Is that what I heard?
Correct, because it would be a red 3 going below the red 2 because next week starts in about 8 hours.
Yep, good call. I didn't think about that. And it's just amazing looking back at those. The last time we got a red 2 and a red 3 and how close it came to falling below and providing a signal, and it didn't happen. I mean, that's just amazing how that will work sometimes. I'm glad that you've got the moving averages pulled up because that is very important to me, seeing that 7 moving average has rolled over and we tried to get through it this week. I'll be watching for that to close below. Could you tell me what price that moving average is at exactly?
Sure. I'd have to turn on. I hate it when they change these things around.
And if it's too big of a deal, I can look it up myself.
No, it should be indicator values. Got it. I don't know why it's in status line. So that moving average is 10,384.75.
Awesome. I'm gonna make myself a note. Thank you.
But it is like live updating, right, as the price changes over the next 8 hours.
Yep.
But it will be but it's not updating much. Yeah, but it's about like 10,380, let's say.
Yep.
10,380 is the mark.
That does seem like an important number, and that would definitely be important to have that rolled over, try to get above it, and then close below with that would give us some sort of, wick that's about the size of the body, somewhere close. So that's definitely something to pay attention to as far as I'm concerned. And I also love how you have that trend line drawn. That's where I really became short-term to medium-term bearish was when we broke down that trend line. If we would have held that, I would have really been looking for a big move to the upside. So I'm very interested to see how this plays out.
So the MACD continues to, bother me a lot. It's not often it crosses. It's not often the MACD crosses that cleanly at a high level. And if we don't go back over it in the next few weeks, then it's historically, it's been in a lot of trouble.
Interesting. That's just something I've never followed, and I don't have a good reason why, because I love moving averages and I like to pay attention to when they converge or diverge. But for whatever reason, I've just never been able to use that very effectively. But it does look like having that histogram now turn back to the downside and to the cross. Yeah, I mean, with the lower high, it is definitely interesting. Something to pay attention to.
Yep. And all right, let's go to the daily chart. What a textbook rejection at the top of the triangle, man.
Absolutely. And I was definitely giving you some credit on one of my recent shows. Just last time I was here, I was expecting this to break down myself, and you were looking for a return back to the top of that triangle. And I mean, you just nailed that. So way to go. Definitely have been impressed. And then now I have seen Peter Brandt is also calling for this a descending triangle. I started to agree after we got that, after we bottomed there and got that third touch point at the bottom barrier. That's where I started to definitely think that looked like a descending triangle. And now sounds like Peter Brandt's agreeing, and it will be interesting to see. Would this be, I know that you love descending triangles and you took a trade last time one broke down. Is this something you would take a trade on if we confirmed this, and probably was be in line with the weekly TD sequential?
Probably. My only concern is the time that this is going to be happening in is going to be very hectic. I'll be going from Georgia to a couple of days in Kiev to a conference in Prague. It'll be a very hectic time for me. And then like a few days in Prague, then Bucharest, then Cluj, then London, and each of these stops is like 2 days. And
Wow.
then London, and all of that, and all my free time is going to be, managing the Bali event because it's happening right after all that. So would I want to be managing a trade? I don't know. The timing is terrible. Last time I had a lot. Back when I did the short trade, I think that was in 2018, last year at this time. I had a little more free time. I'll consider it. Basically, I'll consider it. I don't have any accounts. I have to set up new accounts, and it's just a hassle.
Yeah.
I'm currently in the middle of restructuring my retirement funds because I'm really itching to, like, after I taught that 2-day long options class, I like refreshed all of my options knowledge in order to teach it. And I'm like, oh man, I have to start trading those again. It was just, so I'm restructuring my traditional accounts, and I'm going to start to focus on that a little bit, try to find the time. And I'll probably be entering traditional trades going into the October earnings season.
Oh, very good to know. I appreciate. It sounds like you've got quite a schedule coming up. So,
but let's just say that depending on how this is working out, I will be, looking to, I don't mind exiting a piece of my hodl. Let's put it that way. Am I going to speculate to the downside to make more Bitcoin? Maybe not. We'll find. Well, we'll see. You never know. I'll see how it goes. Right now, I wasn't necessarily interested. See, here's the weird part. I wasn't as interested in shorting, trying to time the short at the top of the triangle, as I would be taking the breakdown. Like, to me, shorting at 9,000 is a lot safer than shorting at 11,000, as weird as that sounds.
I 100% agree. And I think that that's a very, very important point that most people just simply don't understand. Like for me, waiting to long until the parabolic SAR is broken gives me a much higher probability on my position, and therefore, I would want to buy if we broke this thing to the upside and broke that trend line and had a pretty good setup. But I just have too much experience of traps occurring when they are against the parabolic SAR, specifically on the weekly basis. So I would be waiting for further confirmation and feeling much better about entering a long at a price that's maybe 15 or 20% higher than we're at now. And same goes for the short. If you're looking at a descending triangle and entering inside that descending triangle, that's not going to be nearly as, the strike rate won't be nearly as high as if you wait for that thing to confirm and break down. And in a descending triangle that hasn't confirmed is, not signaling an entry as far as I trade anyway. So I completely agree that, waiting for a worse price can often really improve the strike rate to such a degree that, it's just very, very, very worth it. And not waiting could basically just kind of be break even sort of situation as far as I'm concerned. So definitely something that's very important for people to understand is waiting for confirmation may mean that you're getting a worse price, and it may make you look like you're FOMOing into a position or whatever. But the bottom line is you hear Tone or me talking ahead of time that, this is the plan, and then we're ready to stick to it when that time comes. And we also have the patience to not front run those signals, which is extremely important.
Now, I will also add to the fact that if we go straight down to 9,000 by mid-September, I may not want to chase that trade, right? Like, I would need a consolidation first. So this means that if we go straight down from 11,000 to 9,400, I may not be interested in shorting 9,400 in the second half of September. But maybe the last week of September I would, but not the first half of September. I would never take the 94 short. Like I don't want this to come straight from the top of the triangle. I'm more interested in something like this, where we only go halfway up the triangle and then drop down, or we go literally to near the end, because then the distance is small. So I want to make that clear as well.
Yeah, good input. And always hearing people talk about it's not what happens, it's kind of how it happens. And that's a great perspective of how that were to happen. And I would just kind of disagree a little bit, just from my perspective, as I look for the triangle to get about to 60 to 70% completed. And if we are, 60 to 70% through the triangle, then that tells me it's ready to go ahead and break down, regardless of how it gets there. And I do not like when it works its way too far towards the apex. That's really when it starts getting really funky for me, and I tend to shy away. So this would be pretty ideal for me if it fell and broke down from here. And if it did get another bounce, then that would start to really get hairy for me. And the most ideal situation for me is to enter on a throwback. If it breaks down, it's can be a good entry, and I'll maybe put in a portion. But if it throws back to retest for resistance, that is the absolute ideal entry to me.
That is a great point. I'm gonna actually highlight that point in 1 second with the chart. I was just gonna say that what I don't want to see is us getting to the bottom of the triangle on, let's say, a candle like this plus a candle like that.
That makes perfect sense. Absolutely.
I don't want to see a huge crash to the bottom of the triangle. I'd rather see us, a slow grind, and then you try to short to profit from the two giant candles, not entering like here, you have this big red candle, green candle, another giant red candle to the bottom of the triangle. I mean, there was no triangle at the time, but you get the point. This is not how I want to see the price get to the bottom of the triangle for me to short the break.
Absolutely agree. And I think that the moving averages are kind of telling us that what you're wanting is maybe most likely, at least if this is going to break down, it would be very hard for it to just smash right through the bottom, as long as those moving averages have that nice golden cross, and that purple moving average is angled up sharply. So I think that it would take some time for those to cross over. And if that does proceed how I would expect, if they are going to cross over, then it would be a bit of a grind, and that could be a really good confirmation. If we are looks to be breaking down that triangle and we're getting bearish crosses with those moving averages, absolutely would be an ideal setup for me. Love seeing barrier breakdowns or breakthroughs combined with moving average crossovers.
I want to point to that concept of a throwback that Sawcruhteez was talking about. There are articles of me talking about this particular triangle.
Beautiful.
I need to drop the magnet because it gets annoying on the triangles. I need to make this red. And there are Cointelegraph articles where, this was somewhat discussed. And so here, like that. This was a gorgeous triangle because this triangle hit its target right there perfectly. And then pull back. But this particular triangle on other exchanges, and I can even draw it even lower. It depends where your breakdown was. On other exchanges, this throwback right here was perfect, right back to the bottom of the triangle. Then it proceeded to meet its, the target was almost met here pretty much, but this was a good throwback right there, and then the drop accelerated.
Yeah, those throwbacks are just the ideal place for me to enter, where it's clear that this thing broke down, and then you kind of get those big red candles that you don't want to enter on. And then even there, you got a sweet 9, and then looking for that maybe 1 to 4 candle correction to be throwing back to retest prior support for resistance is just absolutely a beautiful entry.
Yeah, these two triangles on Bitcoin during the 2014 bear market were very, very clean. Very clean.
Yep. And Bitcoin is just such a awesome, technical asset to trade, because there's no like earnings reports or anything like that. It's just almost pure speculation. And when you get a market like that, it just follows technical analysis so much better than anything else, as far as I'm concerned. So I just love seeing this type of stuff.
And back in the day when I was doing technical analysis and writing articles at Cointelegraph like twice a week about it, I wasn't even looking at the sequential back then. And this is one of the reasons why I started looking back at those times. Look at this perfect 9 rebounding the price. The one here off the triangle drop, 9 aggressive 13 rebounded the price. This 9 right here on a gorgeous reversal candle took the price, got rejected by setup trend, reversed by a 9. I mean, it was another one right here. Like, this is why I started doing everything with sequential, because when I remember looking back and I'm like, oh my God, why the hell was I not using it? Here's another one. Like,
that is amazing.
It's really amazing when you go back to Bitcoin before I kind of taught everyone how to use it.
Absolutely.
Here's one more, man. Look at this.
Amazing. And I'm curious. So before you had the TD sequential, what were you trading? Just mainly patterns and candlesticks?
Yeah.
Awesome.
I mean, I just never thought of applying TD sequential to Bitcoin at the time. Here's a combo and sequential on this candle. I just wasn't thinking about it. And I'll tell you I even know which day. I should go back and find the video. The first time I ever opened TD sequential on Bitcoin, I remember that day exactly. It was June of 2017, and it was the $3,000. I should be on a weekly chart. This is the weekly chart, right? So it was this 9 right here. It was the summer of 2017 where I was looking at this chart without sequential. And it just felt like 9 candles up to me. And I had the indicator on my trading view because I was, playing around with it in the stock market. And I was like, and I remember saying on live stream, I'm like, none of you are gonna know what the hell I'm about to pull up on this Bitcoin chart, but I really need to see it. And I pulled it up, and it was like a few hours before the end of candle close. It was like it was a Sunday video on this day, on this weekly candle. And I pull up this indicator, and a 9 shows up. It wasn't as fancy as this one. And I'm like, holy shit, guys, I think Bitcoin just topped.
Wow. So you're doing live streams.
Yeah. Hmm?
You were doing live streams without the TD sequential back in the day? That's classic. I'm gonna have to go find some of those.
Yeah, so we can go find this video. I started my channel back in October of 2016. So this video must be there. I'm almost tempted to go and look right now. But whatever the video was from the week of June 5th, 2017, that's the first time I ever publicly opened up sequential. And it wasn't even mine. It was like the free version on the web. And then I rewrote it, and then I had to pay someone to make it perfect.
That's awesome.
But that was the day, basically. All right, enough talking about old times. The 12-hour chart isn't really interesting to me. The 4-hour chart, you're a huge fan of the 4-hour chart. I swear I did not touch this channel. That's exactly where that purple line was for the last month and a half. When you zoom in, it missed it by a couple of cents. But I have not touched it. It was on a sequential 13. I don't really look at the sequential 13s all that much. Would have been nice to get a 9. Look, if I was actively trading, I would have potentially been looking to short here, but I thought this was the top, right? Well, I think we both did because this was a 9 on a 4-hour. This was a 9 on a 12-hour as well. Somewhere. This is the 12-hour. There was a right there, the 9 on a 12-hour. We started going down, and I thought that could reverse the daily. But the market swung a little bit higher, and you have to account for that, right? Like you have to keep that in mind. So what I would tell traders is, look, you don't want to miss the trade. If you had intentions to short the top of that triangle, you know you have reasons to short it off the 12-hour 9 and a 4-hour 9 at the same time right here. But you also know that you have a little more room to the upside that does not violate the reason for your short. So this is one of those situations where if you're going to short this 9, you really need to loosen up on your leverage, maybe make that position smaller, and you want to maybe utilize this risk line as your stop loss, which I normally don't do. And it's not even the fact that it's the risk line. It's the fact that your stop loss should really be clearly above the top of the triangle. But if you're shorting off of this reversal candle, then your stop loss can be significantly closer, and you can increase your leverage and you can increase your position size because you know that you are wrong very, very quickly within a few $100s. But here, you don't know that you're wrong if it goes against you by $300-400. Because here, if you take the short at 10,650, you can still be right if it goes up to 11.1. So you got to really loosen up the stop loss on this to make sure that you're still within your parameters of a short. I know this is all hindsight, but that's how you're supposed to risk manage your positions.
Absolutely. Yeah, great input. And this is definitely something that, I mean, this looks just pretty wrecked to me. I mean, this is a very weird sort of, pattern of candlesticks that we've had over the last, 5 or 6 days or so. And I am very much kind of agree with Tone that what a lot of people think is manipulation is really just good traders, making a lot of money. And that's really what I think's been happening. That 9, I agree. I thought that was the top. And I think a lot of people would have used a stop loss kind of above that wick on the 8, above that local high. And then seeing how we got that just sharp sort of reversal after that red 3, which led to a green 2 above a green 1, and also took out that a lot of stop losses that were set above that green 8 and just immediately reversed, and then basically did the same thing again, where it came down and then took out that high from the 2 above the 1, and also the horizontal. If you go back there, that pink sort of channel you've got, we barely took out that high, which was actually the 2-week high, which was definitely very significant. I know for Ugly Old Goat, taking out briefly that 2-week high, and then boom, get a sharp reaction back to the downside. So definitely seeing that a lot of people are kind of fighting it out in here. And now we do have a bit of a broadening pattern. We've got lower lows and higher highs, 3 higher highs, and now 2 lower lows. So definitely keeping my eye out for a potential broadening top. And you can even kind of draw in some trend lines there to illustrate that. And it would be interesting to see if we fall down to the bottom of where that broadening pattern would be.
Yeah, Ugly. I wonder, like, I wish I had more time to pay attention to what Ugly is up to, but if he shorted this 2-week high, which he loves to do, he would have made bank immediately.
I think he shorted, and I don't want to, I'm pretty sure I remember that he shorted that last, when the price took out the 1-week high, he shorted that, and then he used the 2-week high as the stop loss. Because once it took out the 2-week high, now he becomes bullish. But it only took out the 2-week high for, a 4-hour candle, basically. So that's it's very interesting to me how we have these last 3 sort of jump ups. These last 3 higher highs have been very significant for a lot of reasons. And so if I'm remembering correctly, I think he nailed that, the top on those prior 2 when we rallied up to like 10,750 or so. I think he just nailed that, but then might have been stopped out when we took out that 2-week high, if I'm remembering correctly.
Got it. Yeah, so in yesterday's AMA, I was talking about going long at the breakout of this. This is a 15-minute chart, right? Because we're doing a 3-hour AMA. So the topic came up, and I was talking about buying this breakout of this triangle. And I don't remember what I talked about stop loss, but this kind of sucks. Like this throwback, if this blue line did actually represent my full stop back, you just got to tip your hat off to the market, right? I mean, the trade was right, and but that could be a stop out. And I like these breakouts, throw back to the bottom of the triangle, and then you go higher. And the target was pretty much met because that was, or you came close to that target. Obviously, you are going long in a bearish environment, but you're using a 15-minute chart. Like, I will take this trade each and every time. Well, not every time, because you are. I'd rather see a descending triangle here and short it than going long this off of the big crash. But this is what we were talking about. And then I don't know if you saw my other video. Live, I was talking about the proper way to try and catch a falling knife, and I used the 9, and I would have had a very short, a small loss for a stop loss. But then look at the double 9 on a 15-minute chart, would have made up for that loss if you wanted to do it again.
Absolutely.
Same exact principle.
Is losing small and then winning medium or big, and that's definitely what trading is all about. And I couldn't agree with you more in terms of I got trapped out, stopped out on one of those nasty sort of spike ups, and over the last couple of days have just been basically saying that you got to take your hats off to the market, taking my hood off to the market, and whoever maybe have been behind that themselves, or if it was just natural market forces, it really is kind of irrelevant. And you just have to basically have a lot of respect for the market, the natural market forces, and also who you're trading against, because there are some guys out there who are just experts at identifying where stops will be, and they need that to gain liquidity for themselves. They've got big bankrolls, and they're what what they're doing is mainly just trying to get big fills, and just got to take a hat off when that type of thing happens, and not be, blaming outside forces. Just having a good healthy amount of respect for that, I think, is very important. And one thing I wanted to ask on what you were just talking about on that 15-minute chart is, at what point would you consider it a bear flag versus a ascending triangle?
Well, for me, I would need clear lower highs, and we don't have that here. We have this is the same as this and same as that. Okay. So I would have needed, so this would have been, that would have been more of a flag to me. And we did, and we broke to the upside off that flag.
Okay, and this is maybe where you can teach me a lesson, and something that I've always been maybe just slightly unclear about is that I was thinking that a pennant is when you have a symmetrical triangle, but a flag is when you have a pull up, like it could be kind of.
No, you're right. I was thinking of a pennant. I don't really care for flags.
Interesting. I don't really care for pennant.
I just don't like flags for the same reason I don't like wedges,
which is
too much subjectivity.
Okay, interesting. Yeah, because for me, once it gets like kind of too long, I look for the relation of if it's like a really short, sort of consolidation in that type of pattern, then I really like it as a flag. But when it gets too long in relation to the pole, then it becomes much more of an ascending triangle. And I would like to be able to define that more objectively. At what point can I no longer consider this a flag? Because I do like flagging patterns. So appreciate your input there.
I don't like this posture right here. Like this looks very bearish to me. I don't know if you were in are you in any short trades right now? I know your short trade probably got stopped out.
Yep, short on Bitcoin got stopped out, but I am short Ethereum. I have been ETH USD and ETH BTC.
Yeah, that one bounced back like in the last 24 to 38 hours. Not, I'm sure it'll still go down, but it was about, it's about time. I mean, these things got so beaten up. They're going to bounce a little bit sooner or later, but people better be getting out.
Yep, there's definitely time to pay very close attention. I have been specifically on ETH USD. I was viewing this bounce yesterday as a really good shorting opportunity or selling opportunity, whatever the case may be for you, because we bounced sharply into an area of big horizontal resistance. So just yesterday, I was definitely adding to my ETH USD positions, and in the ETH BTC, absolutely. If you've been in this thing, since that breakdown of horizontal support at 0.025 or so, then this is a very profitable position that you want to make sure you are, taking profit and moving stop losses down. Absolutely.
So gold on a weekly is not, so silver is the interesting one, right? Because look, gold broke its upswing by giving you a red one candle here. So gold's pulling back. Silver, oh boy. So silver had a weekly 9, had a daily 9 inside a weekly 9, and I called that one pretty much like 12 hours off the high. Holy shit, it's time to get out of silver. And I wish I saw it a day earlier so I could have warned people.
Look at that candle. I mean, that is crazy. That is very, oh man, I haven't seen a shooting star like that in a long time on a 9. I mean, that is amazing.
Right, so right here, and the safe trade would have been to short it the moment the following candle started. I mean, that 9 is not a reversal candle, but considering this daily 9 is inside a weekly 9, being preceded by a combo and sequential 13 candle, this was as like bright red lights, like danger, like get out of silver. Like I don't think I've seen a clean warning on a globally known asset name like as clean as silver just showed us a few days ago.
Yeah, and again, same thing kind of about Bitcoin is for silver and gold, they're just like the ideal technical analysis markets, markets for TA, because they're just, mainly built on speculation, and the way that these tools will work in those markets is it's just amazing.
All right. S&P, man, look at the breakout. All I see on Twitter on the S&P is like everyone is starting to post like all of this manipulation and everyone is back. Like all the shorts got destroyed and now they're all blaming money printing as to why the stock market goes up. Like, guys, I've been seeing this forever in the 20 years or so, almost 20 years now that I've been looking at markets. The majority of people always want the S&P to crash. I don't know why, but that's what they want. And I was looking for this breakout. I remain the bull of the S&P 500, and let's see if we can get to a 9 back to. If we get back to this all-time high, I'm expecting it to break. Like I am expecting new highs, like probably this year even.
Yeah, I mean, something's got to happen. We have just been kind of stuck in a bit of a pretty, something needs to happen. We've been in this range for a while, and we tried to break out to all-time highs on that last move. Now we've supported a throwback and gained a higher low. I was absolutely, before this breakout, when we were just right under the top of that resistance, when we were coming up and kissing that, it really looked ready to break out. And I called for a return to all-time high, to retest all-time high before the end of September. So I am very happy with what we are seeing these last couple days. It really looks to me like we should get right back up to above, 3,015 or so. And then, we're primed for a huge move after consolidating, trying to break through this for so long. If we can make a big, solid breakthrough, then we could really be off to the races. So I'm definitely loving what we're seeing here.
Yeah, the weekly candles might just be getting started. If next week starts off to the upside, that's a green 2 above a green 1 near all-time high. I like it.
Totally. Yeah, absolutely.
I like it. And people asked me in that AMA this Saturday, what is my 5-year target for the S&P? And it was really, really interesting because I drew Fibonacci extensions on this chart long time ago. My Fibonacci extensions are, basically the Fibonacci's were from the all-time high in 2008 down to the crash. And this was the 50, I think it was like the 60% crash or 75% crash, whatever it was. And the first extension, held the market back for a full year. Like that's this line right here. And I should probably delete these Tom DeMark quotes from long ago, just in the way now. And right here, that was the first. You can see how it rejected the price. And then a year later, we broke above it, pulled back, and then took off. And we're now doing something similar. So once we break above the next Fibonacci extension, there's your next one. And it took us, we got to it going into the summer of 2015. And then how long did it take us to get to the next one? 2019. So it took 4 years. So my 5-year target over the next Trump presidency, the second term, is probably up to the next Fibonacci extension line right at 4,000.
Wow, that is just an excellent chart. That is fascinating to see. And you can definitely draw a lot of parallels between what we're seeing now compared to back when we were testing that 1.618. Yep. And you could make a good argument that we look a lot more bullish now because back then we had lower lows and lower highs. But here we've got higher highs with the lower lows. So it looks significantly more bullish. And you see what happened last time when we broke through. And that's kind of what I was talking about. If we can smash through this range, then we should be in line to trend in a big way for a long time. And would you do me a favor and just kind of measure the inverse head and shoulders, kind of something that I've been keeping my head on, or you could kind of call it a cup and handle. And that's what I was using to measure a target. And let's see. I wonder if that is somewhere in line. I think it is pretty close to the target you have. Yeah.
That is 20%.
20%. So a little bit shy of where you're looking. Definitely good to know.
And that takes us right there.
Yeah, that's what I've been expecting once we did confirm that. So, yeah, I'm very glad to see your target. That'll definitely help me. I'll be keeping that in mind for sure.
Yeah, but it's going to be interesting. And I am pretty confident the S&P can break to the $4,000 area. The question is the S&P going to enter the last phase of a hyperwave? And if it does, we might be moving through two Fibonacci lines in a oh, that's not the one I wanted to pull up. Oh, and then they go, that's weird. 3, 4, 6, 1, 8. There it is. Because my target was always closer to 5,000. So if the S&P does enter that last phase of the hyperwave, you could be looking at two Fibonacci extensions in a single 4-year presidential cycle.
Absolutely. That's a great input, and absolutely what I'm really in the back of my mind thinking, that if we can really smash through what you have as 2.618 Fibonacci, then we're just going to be primed to enter the fourth phase of the hyperwave. So that's really what I am paying very, very close attention to. And I could even give a bigger target that most hyperwaves, when they enter phase 4, they will return 2x from their peak in phase 3. The large majority, that's like kind of even conservative. A lot will go even more than that. So if we do enter the fourth phase of a hyperwave, I'd be calling for 6,000.
Oh, wow. Yeah. And those blow off tops are very difficult, right? Because we can go from 5,000 to 6,000 in a matter of weeks at the very end. And the thing is, that might have a lot to do with global currency crises, might have a lot to do with other political events. It's not, it may even have to do with, dollar devaluation, though I doubt that it would be the catalyst. Because what people don't realize is one of the reasons why US stocks can go to the moon is just because global capital comes in. Like if the Eurozone breaks up, or if, God knows what happens in China, and it doesn't even have to be political or economic. It could be, a geological event. It could be a giant volcano in Asia, right? It's capital. It's capital. If the Chinese can't buy anything in Canada anymore because they crack down on them buying real estate, right? So for whatever reason, right? Like it doesn't have to be the collapse of the US dollar. There could be other reasons for that.
Absolutely agree. There could be a number of things that propel that way up into those prices. So yeah, this is very interesting times for basically everything: Bitcoin, gold, and the stock market.
People are saying that the 4.23 Fibonacci was actually the proper one because they have multiplied together. But I don't know. I like this one. We'll see. I can always add more.
I'm a fan of the 0.618 levels myself, but yeah, I can see what he's saying with it being 4.236.
That's the one that it had before. I don't want to put in a bunch of my own numbers here, but I'm gonna leave it this way, but I'll be aware that the other one's there. Okay. All right, but thank you for that. Hey, someone asked about, I've never looked at the uranium ETF, but I'm very curious.
Yeah, that is interesting.
And someone mentioned Wyckoff on this one.
Okay.
Man, I'm loving I just gravitate to looking at nines at the tops.
Yep. Beautiful.
And they had a couple of 13s here at the bottoms. The 9 preceded one candle earlier. You're I don't know. I'm not a Wyckoff guy, and I don't get it. Wow, look at this. Jesus. I'm not, and 9 at the bottom. My God, should be trading
Yeah.
uranium.
Yeah, let's, if you could maybe throw it on the weekly and zoom out a little bit, I can see if maybe there may be a Wyckoff that jumps out. I think he's wondering if this may be the spring, and I would not be seeing that here. It looks much more like a bear channel with lower lows and lower highs. Would not be viewing this as well. If we zoom all the way out there now,
Jesus, I guess no one is buying uranium these days. This looks
big
like,
breakdown.
wow.
Yeah, I don't think that this is a spring. I think this is a huge breakdown of horizontal support, and we may be getting a throwback like we were talking about, which could provide a really interesting opportunity to short this thing.
It's $10. It's not.
I mean, that is a major area of horizontal support.
I wish you could short it, but no one will. No, I don't think any broker will let you. It's.
Okay.
I mean, maybe they will, but I don't short stuff at $10 or under. But like, I see no reason to buy into this thing. It looks like the world doesn't need uranium, is what this tells me.
Yeah, and seeing that volume, that big volume over to the left tells me like $12 should really have a lot of people who are going to be selling. That should be big resistance since there were a lot of buyers and sellers up there. And now we broke it down and we're forming a bear channel. I mean, this looks like it's going down to me, that's for sure.
All right. I do have to get going, and it's Sunday. Nothing's really changed in the world of stocks. I will say that another really cool chart came in, and then alerts. Oh, I keep forgetting to put the free alerts channel into the video description. I'll actually do it. You know what? Let me literally do it right now. Otherwise, I'll forget. So I'm gonna add the free alert channel literally right now into the video description. I'm editing the video as we're.
Do you want me to take over screen share while you do that? I got one chart to share.
Oh, yeah. Go for it.
All right.
Oh, I forgot to hand screen share off to you.
Okay. So yeah, I just mentioned the Ethereum and wanted to show kind of what I've been looking at there, specifically the ETH USD. The main reason why I've been interested in being short this is due to the death cross with the 50 and 200 day moving averages. And we were, a little bit far away when that occurred. So have definitely been watching for a bounce to provide a good entry. We do see that we had a pretty nice triangle on this guy, broke down, and now I'm seeing, and we're actually going to need a longer chart here. So just 1 second, because I am seeing this as a significant horizontal, and I need to find a clean chart. 1 second. Definitely need to learn from you and how you save your chart layouts, because that's something that I have not quite learned how to do yet. Okay, so was looking, just wanted to zoom out and look at, we had kind of a bear flag here. We had that breakdown with, and then we had the death cross with the 50 and 200 day. So that is looking pretty ugly for Ethereum. And then I just wanted to show how the areas of support and resistance will be coming in. So support down here about 140 to 150. And I do think that resistance should be strong if we get up to 200. And then also we'll be looking at resistance coming in right here. So we did test that yesterday, and I went ahead and added to my position. And what I will be looking for now is essentially to hopefully not close above this area and then break down horizontal here and come on down to retest this area back in here. Real quickly, just wanted to look at this kind of sharp spike in a bear market is something that I pay very close attention to and something that I really like to kind of jump in. When you get a move from 170 to 180, that's not necessarily that big of a deal, but when it does it this quick and it's just like a really fast and sharp move into major resistance in a bear market, that's an area that I am very, very interested in going ahead and opening a position, because that's just an unsustainable move, in my opinion, when it's really a sharp, fast move opposed to, you know, kind of grinding its way up. This is something that I see as pretty darn unsustainable. And when it's thrown into an area of horizontal resistance, again, this is a nice throwback. This is basically the second one where you have this triangle here and it breaks down here. You don't want to enter on this big red candle, as Tone said, but you wait for a throwback to retest prior horizontal support for resistance. So we got that here. That worked out beautifully. And then I did sell that. And then I did feel comfortable selling this because of how it got there, that sharp spike back into retest this again without establishing a higher low. To me, looked like a pretty interesting selling opportunity. And then if I'm wrong, I've got some kind of backup from my moving average. Notice the 200 EMA, the last time we got a nice bounce, that's where it found resistance. So even if it can make it through here, a lot of resistance is going to be waiting overhead, specifically the 200 EMA and then $200 as well. So just wanted to show that chart. And
yeah, I don't know, leave it. And so, I'm actually going to go the other way with you here. Like, I would be bullish Ethereum right now in USD terms. To me, that first rejection, the one September 4th, that one, yeah. That first rejection was supposed to take prices to new lows. When it did not, and you came back to retest that resistance, it tells me that resistance is to me, that resistance is almost no longer relevant. And at this point, you got to establish a new form of resistance. Now, that moving average seems to have worked very well in the past. All you have to do is go back to August. So at this point right here, now, if you're in a properly, that moving average looks like it's been useful. So right now, if you, let's just say I would have waited. I would not have jumped on a short at the red line. I would have either waited for the moving average to take the short. Now the difference here is only $8, right? Like we're not talking insane amounts here, right? We're talking more like, what if that difference was $800, right? What if this was a weekly chart? The point is that technical analysis is I'm ignoring the horizontal, I'm ignoring the y-axis, and I'm ignoring the x-axis here. I'm just saying that in my trading, I would not have jumped in on a short at the red line. I would have only considered it at the moving average, but taking the short at that first red line totally made sense. But to me, double tops like that are meant to be broken. So I would be looking for bounce. Now, this is very, very different. Actually, it's actually the same thing, because if you reverse the situation and you go to the 15th through the 26th, you see how that red line is supporting, then it eventually breaks. That's exactly what I mean. Like, I would have been looking for a bounce if you go back to like August 19th, and we originally bounced off that area, and we go up. And then when we come back to that area the second time, sure, we can go up, but notice how it didn't get very far, and it eventually broke that red line. To me, this is starting to look like the opposite of that.
Very interesting, and definitely some very good input. Then there is something that I don't think you like very much, and I'm not sure what it will look like exactly on Poloniex, but I am seeing a significant volume profile of, let's see here, And that's going to be tough on Poloniex, but I do think, that there is a significant volume of sellers, basically, that because it was back in here that it was support, and then right here there was significant volume on that as it was trying to hold as resistance, and now we see that back in here this price was there's been a significant amount of buyers and sellers at that price, which makes me believe that the double bottom is not as important. Like, I think that we were looking at a double bottom versus a double top, and I think the double top is going to hold and the double bottom is going to give, because of I'm seeing more volume at this price at 180 than at 160, and I'm not able to do a good job of illustrating that on this chart, but that is basically kind of why how it got there, and also how much we have seen volume at 180. It should be, I think it should be pretty hard for this to break through. And I am kind of viewing this as a similar sort of trap that we saw in Bitcoin, where it's like a head fake that maybe takes out some stops, absolutely makes a lot of sense. And maybe that kind of already happened as we took out this right here. So I'm not really too worried just yet, but definitely if we break above that 200 EMA, I'll probably be changing my tune. But there's just nothing but resistance, and we just recently had a death cross with that daily. It's very important to me, like how soon. Like, if this had been sustained for a long time, then it would be looking like it's ready to reverse. And since we just had one, I'm thinking that we're really postured for a big move to the downside. So with how much resistance I'm seeing, definitely, could be changing my tune very quickly. But as it stands, I'm thinking that 180 should hold.
That 200 looks like an even crazier resistance point to probably turn the price of Ethereum.
Absolutely. 200 has been a very, very important point for Ethereum, and definitely still thinking that we should be, I've been calling for double-digit Ethereum before the end of the year, and I still feel like we should be coming back down to retest these lows after we broke down 200. That's where we went to last time. Right here was when we broke down 200.
Oh yeah, no, I completely agree. Oh, by the way, since I have you on, if you look at the right-hand corner where it says unnamed.
Yep.
Right, if you pull that down, if you just click on unnamed, just click on where it says unnamed, or pull down the menu, I guess.
Yep, how's that?
There it is. So you can basically save that as a chart, and it's like a Word document. So it's you can do rename, and you can actually name it something, and it saves it based on asset, like the asset and the time period. So if you save Ethereum daily and Ethereum weekly, it'll just hold on to all of your annotations independently if you save them differently.
That's beautiful.
So it's so you just gotta save them individually. Some people like it, some people don't.
Yeah, I don't like how mine has an auto save on, and it's always automatically saving these old lines that I don't care about anymore, and I need a new clean chart. So I'm glad to know where that auto save is, and I'll definitely start saving some, I believe. And I want to say hi to Leah. We saw Leah in the chat, so that's
neat. Oh, Leah's in the chat. I wasn't paying attention.
She even gave us a tip.
Hey, Leah. I'm gonna see her in DC tomorrow.
Excellent. Definitely. Tell her hi for me, and I'll hopefully be seeing her on the trip to Bali. I'll definitely be wanting to stop in to see her new digs.
Oh wait, what am I missing here? I clicked on something. There we go. Okay. Hey, so I'm gonna just show you one more chart real quick before we do. Speaking of Bali, October 19th to 25th. Check it out. The Financial Summit. Also a bunch of stuff on tonebase.com. It's just something that came up in our month. This is the monthly 9 on Tyson Foods. And again, I love how it respects the sequential here and here. Now, this was a double, was it a double 9? 8, 7, 6, 5, 4, 3, 2, 1. Yeah, this was a double 9 that topped it. So you know if you short, I mean, there's no reason to short this 9 or this one because you never even had a red candle. Though you did have a red candle on this 9 itself. So chances are this was a failed trade for a small loss. But everything else, this was probably a no trade. And this was a good short, and that was a good short, and that was a good short. And earlier this month, I mean, we got to it a little bit late. It's until this is fully automated, and checking every single stock is insane. Hasn't had too many 9s at the lows. There was one here that didn't actually end as a 9, unfortunately. But this is an example. So I'm actually want to go glance at Tyson Foods on a weekly and daily scale to see if there was anything that could have been used to time the top, just out of my own curiosity. So if we go to Tyson, and then I'll leave it here, Tyson Foods. So this
provide one little input on that monthly chart that I definitely think would, for me at least, kind of confirm that 9 is a reversal is the dark cloud cover pattern that we're seeing, which is something that I really do like. And what that is basically when you retrace a Marubozu by 50%. So if you get an extended range candle or a Marubozu, and then the next candle retraces 50%, that's what I consider a dark cloud cover. And that's a highly probable 2 candles set up to reverse the price in my experience. So seeing that with a 9 is definitely interesting. And we'll see that price probably has already made a significant move downward, but I wouldn't necessarily hesitate because we're below that 50% of the Marubozu. I wouldn't expect us to get back above that level. So definitely interesting to see if we'll get a 2 below this 1 here.
Yeah, this is the weekly chart. It bottoms pretty much on a sequential 13 with the reversal candle. The 9 came a little bit late, but definitely good enough. You had a double 9 happening here. So there was a very good question in my AMA yesterday. When do you really pay attention to some of these 13s and when you don't? I would not pay too much attention to this combo 13. The reason is because it's coming from a second back-to-back 9. And if you're actually looking at the Tom DeMark sequential, not my version, that combo 13 wouldn't be there because the second 9 wouldn't have shown up. So I would have paid attention to the sequential 13, and that was a clue for the traditional traders to get out of this asset because it has played out everything. It reversed off of sequential 13 buy, and it pretty much completed on a sequential 13 sell, and that was, it still went up about $5 more to the top, and then it tipped over. But remember, this was also a monthly 9 topping. So I'm going to go back to my version, and now I'm going to glance at the daily chart to see if there was anything interesting in the daily in order to help you time that top. And unfortunately, there was not. Almost. I hate when I see this, man, because look, 1, 2, 3, 4, 5, 6. One candle messes it up, and then 7, 8, and that could have so easily been a 9. Like, I hate when that happens. And if you're constantly trading this indicator and you see a situation like that where one candle breaks the count, now in this case, the close of this candle is clearly significantly lower than the close of the 3 candle. But let's say they were within 3 cents of each other and there's still a price flip. This is what I refer to as the spirit of the 9, where you have to use your brain and your common sense to say that, hey, if one guy didn't sell that position at market close right here, this would have been a green 7, making that a perfect 9 top in line with a monthly 9. So you do have to use some critical thinking here. And these things kind of happen. And I hated it when it happened on Bitcoin as well. On Mt. Gox, for example, there was a perfect 9 at the top, at the 2013 top. But on many other exchanges, there was 1 week or 1 week in that series, or 1 month in that series, I don't remember, where the close was like $1 off. And that's the only thing that prevented most other exchanges not having a 13 at the high, but the Mt. Gox did. Actually, I'm just going to pull up that chart real quick. It should be under MT Gox. Bitcoin Mt. Gox monthly chart right here. Yeah, and it's my old TD sequential too. I have to get the latest version up. But right there, and many other exchanges on this, on one of these candles, I think it was the 5 candle, it just happened to close like $1 less than 4 candles earlier right here. And it messed up this count on other exchanges. But on Mt. Gox, beautiful monthly top right at the 2013 high.
That is beautiful. And as well at 2011. And I definitely agree with you in terms of the spirit of the indicator, and the spirit of the 9 is it's there if you just have one candle that barely throws it off. You have to definitely use your brain and think, does this still count? Does this still qualify? And I absolutely agree with how you approach that.
And this one was actually a double, which again, I'm starting to love more and more.
Yep. And it's just amazing how you have all those fundamental events going on with, everything that was going on with Mt. Gox, and still the 9 is what calls the top of, like when all that stuff started falling apart, it just so happened to be after a 9. I mean, it's crazy.
And looks like on the weekly as well.
Wow. That is beautiful, man. And that sure consolidated into a pretty darn bullish pattern that would have looked like it was ready to break up.
It really did.
And dumped.
All right, guys. I think it's good to call it a day. Once again, I was joined by Sawcruhteez. You can check him out on his YouTube channel at Sawcruhteez Streams, his TradingView channel, Sawcruhteez, and of course, his Twitter. You can come and hang out with us in Bali, along with Ben Zen and Willie Wu and Leah Wall, and several other traders and hedge funds. That's the event we will all be at the end of October. I'll have an upcoming workshop in Bucharest. I've kind of stepped back from in-person workshops. I will be doing one in Bucharest, Romania, October 8th. You can also check out my travel calendar, where I am off to, I have to drive to DC in like 20 minutes. I have to get going. We have Latvia, Azerbaijan, Georgia, no speaking gigs there, more like an attempt at a vacation, Prague. And after that, I'll be in London and Romania and several other places, including Greece and Portugal. After Greece, I'll be speaking at Web Summit. There's other things here. We haven't filled them out yet, but yes. All right, guys. That's it. If you want to support, check out the affiliate page. Whether you're using TradingView or VPNs or exchanges, go ahead and check that out. That's it. That's pretty much it. Those of you that were asking about the shirt I was wearing yesterday, it's in the store. Oh, these are cool. I wear this all the time, by the way. It's I don't know, you can see it like in a little bit, but these are actually really, really cool. These little bracelets. It never comes off my hand. I even go through like TSA with it. People were asking about this shirt. That's the shirt I was wearing the other day. We got to get more shirts up. I got a bunch of these shirts in the mail the other day, so that was great. The shitcoin shirt, more fitting than ever now. All right, guys. That's it. That's it for us. Longer stream than I wanted, but it's all good. Sawcruhteez, thanks again for joining. Always like your insight. Good luck trading, and good luck with your channel.
Thank you very much. I sure appreciate you having me on. Always enjoy it myself, and travel safe, and tell Leah hi for me.
Will do. Later, man.
See ya.